Hey everyone, Bryce Greenleaf here, your local Greater Seattle area real estate agent. So on today's video, I wanted to go over the market and specifically what kind of trends we're seeing, what direction the real estate market might be moving in here in the Greater Seattle area, and what you might be able to expect here moving forward through the rest of the year. So as you may know, if you pay attention, you watch all the other real estate market updates, you may know that the real estate market this year has been insanely hot. I mean, the hottest that we have seen it in a very long time, probably ever, with all of these crazy bidding wars happening on these homes. Most homes having multiple offers, many different homes having 10 to 20, sometimes even over 20 offers on one single home. And these homes getting bid way up over list price and buyers committing to pay over appraisal amounts. It has really escalated to a point that we haven't really seen before. And so that's made it pretty difficult this year for a lot of buyers to get into homes that maybe don't have quite the financial backing that some of these other buyers do. The cash at hand has really been a major issue for a lot of first-time home buyers, or really any home buyers in general in this market right now. The supply and demand has been so wonky this year that we just have had not anywhere near enough inventory to support the amount of buyer demand that we've had. Having such good interest rates has really started to create a lot of buyer demand this year, and unfortunately, the inventory hasn't followed that trend, and it has stayed very, very low, lower than we'd normally see this time or any time of a specific year. So that's created a huge problem in the market when it comes to buyers trying to get into homes. So the good news is we're starting to see a little bit of a shift in the market being a little bit more buyer friendly. So like I said, most homes had multiple offers on them going way over asking price, some even 10 to 20 or more offers. Now we're starting to see that slow down a little bit. I'm starting to see these homes that did have 10 to 20 offers on them maybe have 5 to 10 offers, sometimes even 2 or 3 offers. So that's making it a little bit easier for buyers in this market. Also, they're not getting bid up quite as high over asking price. When you're someone that's looking to sell their home and buy a home at the same time, usually when you sell your home, you have a sale contingency on your purchase, meaning your purchase of the next home is contingent on your sale closing. Now, in the market that we've experienced this year, this was nearly impossible to get accepted with how competitive things were. Other sellers didn't want to touch your offer because it was contingent on your other home selling. So that was super, super hard to be able to navigate for those looking to sell and buy at the same time. Well, recently we've seen multiple different times that these contingent offers are now getting accepted. I just had somebody in this exact same situation get accepted just recently with a sale contingency on their purchase offer. So that is really showing us that it's starting to soften a little bit and become a little bit more friendly for buyers. So let's jump into some numbers right here, kind of see what's been going on and what trends we might expect moving through the rest of the year. So let's just start with the median home prices. So really, median home prices this year have escalated again to a point that is just not sustainable and we've never seen before. There are cities like Bellevue where the median home price has been up over 50% in 1 year. Plenty of other places in King and Snohomish County from 20 to 30 to 40% in annual home price increases just 1 year. That's just not healthy. It's not sustainable. Really, a healthy appreciation is 5, maybe 10% at the most. Really closer to 5% is a healthy appreciation. So when we're seeing places anywhere from 20 to 50% in appreciation, it's just not doable to sustain in the long term. So we're hoping that will calm down a little bit, and we're seeing in some places that it is starting to calm down here over the last couple of months. So right now in King County, the median residential home price is $825,000. This is up 20% annually. So this is the entire county, the entire King County. And in Snohomish County, the median home price is $700,000, and this is up 23% year over year. All right, so let's jump into the next statistic here, and we're gonna go over active listings. This is gonna show us our inventory and what is happening with our inventory, whether we're improving or just staying at that low inventory number. So in King County in July, we had 1,820 active listings go on the market, residential listings. The month before that in June was only 1,483. So we have seen an increase in almost 400 homes in inventory in 1 month. So this is fantastic news for buyers out there, for helping to soften the market, is our inventory is going up, and it's going up a good amount. So this is really gonna help out with those multiple offer situations, calming all of that down. In Snohomish County, we had 734 listings in the month of July, and the month before in June was 487. So the same trend with King County is that we are seeing a lot more inventory starting to come up, and that's really going to help out you buyers. All right, and the third stat that I want to go over here is the sale price to list price ratio. So we're seeing at the peak of this, many sellers on average getting close to 110% of list price. So it has started to calm down a little bit, as you can see here on this graph. So in King County in July, just this last month, it was 106.9% of list price. In the month just before that, in June, it was 108.4. So we have improved a little bit as well. You can see the trend of this chart. It is going down a little bit. Same thing here with Snohomish County. Snohomish County was 106.6% just in July, and in June it was 108.5%. So again, we're going down. We're getting closer and closer to that 100% of list price and not over list price. It's still a seller's market. Let's not confuse that at all. This is still an amazing time for sellers to sell. The sellers have most of the leverage in this situation, but we are starting to see a trend where it's improving for buyers in this market. So if you are thinking about buying a home in this market, it's important that you have great representation, somebody guiding you through the entire length of the process, through the transaction, to help you put yourself in the best situation possible to get an offer accepted on these homes. Because it is so competitive out here, there is a lot more to an offer other than just the purchase price that you've got to consider to make your offer strong. So in a market like this, make sure you have good representation so you're having somebody that can guide you through properly and help you get an offer actually accepted. But I'm hoping these numbers provided a little bit of good news for you if you're specifically a home buyer in this market, and we're hoping it'll continue to improve that way as we get through the year. You know, this is getting into the quote unquote slower time of the year as we head to the end of summer and through fall and get into winter in the holiday season. This is traditionally when things start to slow down. Now, inventory usually does come down at that point as we get into the winter, but competition is much, much less. So if you're a buyer, sometimes that can be a good time to buy. If you can find the right home, sometimes you don't have as much competition, but we're seeing that competition slow down, so it should help out a lot of you that are looking to jump into the market. All right, well, this wraps up my Seattle real estate market update for August of 2021. If you've got any questions on the real estate market or buying a home around here in general, or selling your home if you are looking to make a move, whether you're moving out of the area, looking to downsize, looking to get something bigger, feel free to reach out to me here at my info on the screen. You can call, text, or email me, and I'd be more than happy to guide you through the process or just answer any questions you have about the market and what you might expect moving forward and what the best plan might be for you. So feel free to reach out to me, but I appreciate you watching this video, and I'll see you on the next one.